Meta just reported earnings. The stock is down 9% in the after hours. It's really, really bad. In total, it's down pretty close to 20% year to date versus the S&P 500 that's up 8 or 9%. But a lot of the Meta shareholders aren't really worried because most of us bought Meta for the massive 0.3% dividend. But I mean, the report wasn't really, in my opinion, as bad as it looks on the surface. So I'm gonna talk about it and give you my opinion on Meta. Now, they did miss on earnings per share. It was a big miss. 618 versus 72022. They beat on revenues, but they did miss on earnings per share. Now, the miss was mostly due to a $2.4 billion charge related to a lot of their legal proceedings. They had some kind of legal cases and they had to pay up $2.4 billion. They recognized it as an expense, and it really weighted on earnings per share in general. And then they had another one time, I think $1.2 billion due to them, like I think firing some employees, and there was something around there. So they had some one-time charges, you could say, and that affected earnings per share in a major way. Meta has also guided $62.5 billion for Q3, and the analysts were expecting $63.15 billion. So I mean, no big deal really. It was also a small miss on the analyst guidance, but the market freaks out and it sends the stock down 9%. In total, the report wasn't really too bad. The company grew revenues 28%. 28% is massive for a company like Meta, over $3 trillion. And it's been growing 20% revenues for the last pretty much 7 or 8 quarters. And it's been very impressive to me. The company right now is reaching 3.6 billion people every single day. It was like 2.2 billion in 2019, now sitting at 3.6 billion people. And imagine the reach and the power whenever you can advertise to $3.6 billion for pretty much free. Any kind of a company that has a product, that has a website, that has any kind of service to sell, they have to advertise on Meta, or else they would be missing out on 3.6 billion people. And the Meta app can decide to launch Threads, they can launch Meta AI, they can launch any product and advertise it to all those people for pretty much free. So this is, I believe, an amazing advantage that's not priced in the valuation of Meta. Now, in terms of CapEx, the company is pretty much maintaining CapEx. They had 125 to 145. Now they have 130 to 145. So they barely raised it by $5 billion. A lot of people were expecting it to be much worse, but it wasn't really as worse as people were expecting. They maintained guidance and the stock is still down 9%. So I don't know if they raised guidance, they would have been down maybe 14, 15%. But, this is the market we're in. I don't think it was as bad as, people were expecting. If we look at CapEx in general, the company has been spending a lot on CapEx, from $37 billion, $70 billion, $90 billion over the last 12 months. And people are saying, show me the return of all those CapEx. But if you look at the company's cash from operations, it has been skyrocketing like never before, because a lot of the CapEx of Meta isn't just being spent on the metaverse or to design some kind of a very expensive product to compete with Claude or ChatGPT. A lot of it is being used for internal the businesses and internal compute in general. And if you look at cash from operations, it's skyrocketed from 71 billion, 91 billion, 115 billion, 130 billion dollars. So this is pretty amazing, where the company is showing a lot of results from this CapEx, and the market is still believing that they just spend it on CapEx and they're just throwing it down the toilet. But if you look at how much they're spending on CapEx, they're spending 69% of cash from operations on CapEx. They also did the same in 2022 when they spent 62% of cash from operations on CapEx. Now, if you look at what happened after they spent all this money on CapEx, revenue growth went from negative 4% to growing 20% plus, and it has grown 20% plus for 2023, 2024, 2025, and even now in 2026, and it's still growing 20% plus. So I don't know about you guys, but it doesn't really look like the CapEx was just flushed down the toilet. I'm seeing a massive reacceleration in growth for Meta, and they can decide to boost this profitability anytime. And right now, we even have a very competitive model from Meta called Muse Spark. And if you look at this video, they created some kind of a game, I believe, on ChatGPT and Claude and Grok, and they compared it to Meta's model. And it was very interesting because the Meta model was a very good outcome. It only costed 20 cents. Grok costed 51 cents. GPT-5 costed $1.93, and Fable 5 costed $5.20. It's just huge from Meta, where you have this product and it only costs 20 cents. I mean, this is as cheap as the Chinese models almost. I'm very impressed by the innovation of Meta. Meta right now has Alexander Wang. He's very active on X, and he's saying like Gemini who on some kind of a statistic where is they're pretty much beating Gemini with a fraction of the staffing at Meta. So I mean, I see a lot of results. I see efficiency. I see headcount going down. I see revenue accelerating. I see a lot of things to like within Meta. Everything pretty much except the stock chart. But if you look at the company's valuation, right now the stock is trading at about 18 times earnings. I think 18 times earnings for 3.6 billion daily active people, for the AI model that Meta has for WhatsApp and Instagram and Facebook and Oculus and the Threads app and so many different things. I think 18 times earnings is low for such a company that's growing 27% in revenues, especially if you take into consideration Meta's aspirations to enter the cloud business. If they can enter the cloud business and start selling some compute, the company can have more of a recurring revenue business model, which I believe could potentially provide Meta a massive multiple expansion. The reason why Meta has traded at such valuations was because, advertising is cyclical and they are a cyclical business. The cloud business is also somewhat cyclical, but it's a little bit more predictable than the advertising business. So if they can, replace 10, 15, 20% in some kind of a recurring revenue business model or subscriptions on WhatsApp, which I've been saying in other places, I think the company could potentially get a massive multiple expansion from 18 times earnings to potentially at least 21, 22, maybe something like even Google, like 25 or 27 times earnings. So I think Meta is undervalued. I don't think that was their best quarter ever. I'm just being honest, but I don't think it was as bad as it looks on the surface. I remain a shareholder of Meta. I think I own enough. I don't know if I'm going to be buying this dip. I believe I have enough in my portfolio, but, it would be interesting to see what happens. And that was my opinion on Meta. Hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.